Well, Ryan, Happy New Year. Thanks for joining us again.
It's good to be back.
Yeah. So we're here at Cambridge House. It's January 2018.
Yes.
You're giving a talk, 5 stocks to watch.
Yeah, 5 stocks, unknown small cap stocks
Right.
that have exposure to a recovery in the resource or the energy segment.
That's right. And it's not pure play resource stocks.
Exactly.
Yeah.
There's some that have more pure exposure, and then some that are like ancillary or supportive to the industry, whether it be a drilling company or a service company or a company that's milling, say, gold, or a company that, one of them we look at is called Hammond Power.
Okay.
And they are really a back end or a back door to this industry. They build transformers, and when I say that, I don't mean Autobots and Decepticons. What I mean is the type of power transformers that are used to step up power for it to go over a long distance and then step it down to, say, bring it into your home.
Right.
Now, how do they benefit from a recovery or a commodity price boom, or at least a recovery in commodities? Well, they sell large type transformers as a part of their business to, say, the mining or the energy industry. So they have a good solid base business right now that's humming along at the best level it's been in around 10 years. But when you see that potential uptick from that sector, you see growth, and we see it trading at a reasonable price. Right now we think there's 35% upside over the next year, and we think Hammond Power is a good way to play a recovery in energy and in mining prices.
A few more that you wanted to mention.
Yes.
Yeah.
Yeah, I know. Well, one company that it helps you get exposure to gold. We see gold producers, and we're at a resource conference, and this is going to be blasphemy to say, but they're great resource explorers. They're great destroyers of capital over time. But we want a way to be able to play gold, because the price of gold as a store of value we think has some value. Now, we have found a company called Dynacor. It's listed on the TSX. DNG is the symbol. We recently recommended it to our clients. The value there is that they don't just have one single deposit. They have a milling operation in Peru, and they use small-scale miners to use as the feedstock for their processing facility. Now that facility gives them not one specific company or resource risk. So they are producing primarily gold. They just had some great news out. They paid off all their debt at the start of this year, so there's no debt. They're in a net cash position right now. They've also announced that their milling facility, as of November 25th, has hit capacity, so it's 300 tons per day. They're there right now, which is excellent. They produced around just under 80,000 ounces of gold last year. If you annualize what they did in the fourth quarter, they're on track. Now, we can't say if they'll get there, but they're on track to do over 100,000 ounces this year. It's trading at an enterprise value to EBITDA, which is what we use to value it, of under 4, and a cash flow, price to cash flow, expected cash flow this year of in the range of 5.5, 6. It usually trades at 10 to 12. So we could see, you hate to put a target price on it, but we could see $3. It's sitting at about $1.80 right now. Of course, if the price of gold collapses, everybody in this segment does poorly. We think that this company is positioned better, even if you saw a collapse in the price of gold or a downturn in the price of gold, to benefit long term from what we would expect to see, at least level prices in gold, or if you saw some upside in gold, it is well positioned for that.
So will you be buying resource stocks this year?
We'll be very selective in what we buy. There's a couple of companies in the energy service sector that we look at on the energy side of the business. So if we conclude in resource, if we can include any company that is in energy as well. There's a couple of companies that we're looking really closely at right now. A company that we've owned in the past and did very well on is a company called High Arctic. Its symbol is HWO on the TSX. They are an energy service company. What insulated them from the energy price collapse was they have primary operations in Papua New Guinea. There's a tremendous liquefied natural gas sector there, and they were selling to Asia. Now, they are a primary service company in that area of the world. The last time we bought them, about 5 years ago, they were trading around the $2 level. They increased their dividend 3 times over that period. We sold them just last year around this time at about $6 and change, in that range. They're trading around $4 in that range right now. They were able to generate so much cash flow in PNG. They bought the third largest drilling fleet in Canada. We think there is some value there. I think that you may have to wait a year, but I mean, this is when we'd look at it when it's been a little bit out of favor of late. So we'd look at the stock in this range. So that is a company that we're looking at now. It pays a good dividend, yields about 3%, but the upside is really in the share price, and that's what we would buy it when it's depressed right now, and potentially have another upturn cycle.
If you're looking at stocks, resource stocks specifically, that have another dimension to them, like services or milling or whatever, are there really that many opportunities out there for investors?
How do we find the companies we look at generally? We look at every company in Canada twice. Myself and Aaron, 35,000 or 3,500 financial statements. We really have no lives, right? We just sit there and read these all day.
Right.
But that is how you find these little gems. You may have to go through 1,000 companies to find 2 or 3. So, and there is some in Canada. There's software companies that service. Although a number of these companies have been taken out of late because they were at depressed values and it was a good price to buy some. There is some that you can play this segment on a backdoor basis. I'll be talking about 5 of them today. I mentioned a couple of them today as well, but it is difficult to find, but you can find them if you're looking at literally every company in Canada, which is what we do.
Like you guys do. Okay,
Yes.
You'll do the work for us.
That's what we try to do, for sure.
Wonderful. Ryan, thanks again for joining us.
Thank you very much.